HDFC AMC is all set to be listed on the bourses. The IPO will open for subscription today. But before that, Sumit Sarkar is here to tell us all that the company has to offer and its public offer as well. Sumit, good morning yet again.
Good morning, Neeraj. If you see, the asset management company is looking to reach close to 2,800 crore rupees at a price band of 1,095 to 1,100. And at the upper end of the price band, that is 1,100 rupees, the company will be valued at close to 23,300 crore rupees. Now, the IPO is a complete offer for sale where both the promoters, that is HDFC and Standard Life, will be selling their shares and gaining close to 56 to 73 times their investment in the company. Now, if you see, HDFC AMC is the largest asset management company in India in terms of equity-oriented asset under management, and the second largest asset management company when it comes to the total overall AUM of the company. Now, if you see, it could be also the second listed asset management company in India. Now, over FY14 to FY18, the company's total asset under management has increased at a compounded annual growth rate of 27.5%, and as of June 30th, 2018, the company's total AUM was close to 3,07,600 crore rupees. Now, the company has nearly 133 schemes, of which 27 are equity oriented while 98 are debt oriented. Now, if you see, of the total mutual fund AUM, 47% is related to equity schemes while 38% is related to debt scheme. And over FY15 to FY18, the proportion of equity schemes contribution has increased to 47%, which works in favor of the asset management company as it is a high margin business for them. Now, on financial comparison, if you see, I've compared it with Reliance Nippon AMC and ICICI Prudential AMC. Now, Reliance Nippon is the only listed asset management company in India, while ICICI Prudential AMC is the largest asset management company in India. Now, the growth rate for HDFC AMC has been better than the listed peer, that is Reliance, but it has lagged the growth rate of ICICI Pru. Now, the company's revenue, net profit and AUM over FY14 to FY18 has grown at a compounded annual growth rate of 20%, 19% and 27.5%. And if you see the unit metrics, HDFC AMC's net profit as a percentage of AUM, now that is highest when compared to its peers, and that is the reason why it is the most profitable asset management company in India, and this is because of its higher revenue and expense metrics. But over FY14 to FY18, if you see, all the three unit metrics, that is revenue, net profit and total expense as a percentage of AUM, have declined for the company. On the return ratio side, the company's return on equity and return on asset are better than Reliance Nippon, but it is lower compared to ICICI Prudential AMC. For financial year 2018, the return on equity stood at around 33.4% and return on asset at 36.4%. Also compared to last year, that is financial year 2017, the return on equity for HDFC AMC has declined to 33.4%. On the valuation side, if you see, compared to Reliance Nippon, which is the only listed AMC in India, the valuations are pretty expensive. The price to earnings is at a premium of 19%, and for financial year 2018 it stood at 32.3 times. Price to book is 10.8 times, and market cap as a percentage of AUM is double to that of Reliance Nippon AMC, and it's for FY18 it was close to 7.8 times. Lastly, on the brokerage side, all the brokerages have a subscribe rating on this IPO. Motilal Oswal has a subscribe rating on the back of the HDFC brand and because of the higher mix of high margin equity oriented scheme. Angel Broking has a subscribe rating because of the high growth potential of the mutual fund industry, strong return ratio, its asset light business model and a higher dividend payout, while Choice Broking has a subscribe rating despite the expensive valuation, as it says that the expensive valuation is justified on the back of the higher concentration of the equity assets, most profitable AMC tag and because of the HDFC brand.
Well, thanks a lot for that, Sumit. So that's the HDFC AMC IPO in complete detail.